Hey everybody, and welcome back to Talk Tickers, where we break down earnings calls so you don't have to. Today we're diving into NextEra Energy's Q4 2024 report.
Yeah, their earnings call?
And
This was a big one.
this one had some surprises.
Definitely some stuff to unpack here.
For sure. So for those of you who maybe aren't as familiar with NextEra Energy, they're the parent company of Florida Power and Light.
Yep, one of the biggest names in the utility space.
And they've been making some serious waves in the renewable energy world.
Oh, absolutely. They're not just dipping their toes in the water. They're basically doing cannonballs into renewables.
Exactly.
No.
So let's start with the headline numbers. NextEra had a killer year in 2024, exceeding expectations for the 15th year in a row.
Can you believe that 15 years straight?
It's pretty insane, especially in an industry like energy where things can be so unpredictable.
Talk about consistency.
Right. So they ended the year with adjusted earnings per share of $3.43, which is an 8% jump from the previous year.
Not too shabby.
Not shabby at all. So it seems like their long-term strategy of balancing growth with efficiency is really paying off.
I'd say so. Now let's break down their two main businesses, starting with Florida Power and Light, or FPL, as the Wall Street folks call it.
They're the largest electric utility in the U.S., and get this, their bills are 40% lower than the national average.
40% lower.
Yeah, it's wild.
You know, you got to wonder, how do they manage to keep those bills so low?
Well, for one thing, they've invested heavily in a storm-resilient grid, which really paid off in 2024.
Oh, yeah, with all those hurricanes we had last year, Debbie, Helene, Milton.
Right. FPL's grid was able to avoid over 2.7 million outages during those storms.
That's huge. Not just for the company's bottom line, but also for their customers who didn't have to deal with power outages.
Talk about a win-win. And on top of that, they're going all in on solar energy.
Yeah, they added like 2.2 gigawatts of new solar capacity last year.
And they're aiming for a whopping 15 gigawatts by 2033.
15 gigawatts. It's mind-boggling.
Right. It's like they're building a solar farm the size of a small country.
It's a huge undertaking, but it shows how serious they are about renewable energy.
Now, here's where things get really interesting. FPL is gearing up for a new rate case.
Oh, yeah, that's going to be a big one. It covers the 4 years from 2026 to 2029.
And they're projecting that a typical customer's bill will only go up by an average of 2.5% per year during that time.
2.5%, that's pretty amazing considering inflation and everything.
They even pointed out that bills in 2026 are estimated to be 21% lower than they were 20 years ago, adjusted for inflation.
That's incredible. It really shows how committed they are to keeping costs down for their customers.
Okay, so FPL is clearly doing some impressive things. But what about NextEra Energy Resources, their renewable energy arm?
Well, they're the world leader in renewables and storage, and they just had a record year adding 12 gigawatts to their backlog in 2024.
12 gigawatts. That's like adding an entire major utility to their portfolio.
Yeah, it's massive. And it really speaks to the growing demand for renewable energy across the board.
You've got utilities corporations, even entire cities looking to go green, and NextEra Energy Resources is in a prime position to benefit from that trend.
Absolutely. They're the go-to guys for renewable energy solutions.
Now for the plot twist, NextEra just announced a partnership with GE Vernova to develop natural gas-powered generation solutions.
Wait a minute. Didn't we just say they're all about renewables?
I know, right? It seems like a surprising move for a company that's so heavily invested in clean energy.
It does, but it actually makes a lot of sense when you think about it.
How so?
Well, renewables are great, but they're not always reliable. You need something to back them up when the sun isn't shining or the wind isn't blowing.
And that's where natural gas comes in.
Exactly. It's a more reliable source of energy that can help bridge the gap and ensure a stable grid.
So NextEra isn't abandoning renewables. They're just being pragmatic and recognizing the need for a balanced approach.
Precisely. They're not putting all their eggs in one basket. They're diversifying their energy portfolio, which is a smart move in the long run.
And their choice of partner GE Vernova is significant too.
Oh, absolutely. GE is a leader in natural gas technology, and they have a proven track record.
So by joining forces, NextEra and GE are creating a powerhouse in the energy sector.
A force to be reckoned with for sure.
This partnership could have major implications for the energy market, and it'll be interesting to see how it all plays out.
I'm definitely keeping my eye on this one.
So to sum it up, we've got FPL keeping bills low and the lights on NextEra Energy Resources leading the charge in renewables, and now this intriguing partnership with GE Vernova in the gas-powered generation space.
It's been a busy year for NextEra, that's for sure.
And it shows that they're not just following the trends, they're shaping the future of energy.
Absolutely. They're a company that's thinking long-term and making bold moves.
And on that note, we're going to take a quick break. But when we come back, we'll dive into NextEra's financials and see how these moves are impacting their bottom line.
Stay tuned.
We'll be back in a flash,
All right, so welcome back to Talk Tickers.
where we're breaking down NextEra Energy's Q4 2024 earnings call.
We talked about their stellar performance.
That surprising move into gas-powered generation.
Now let's get into the nitty-gritty.
The numbers.
Exactly. Let's see what these numbers tell us about NextEra's strategy.
Sounds good. Our listeners love to hear about the financials.
All right, so first up, Florida Power and Light FPL.
Yep.
Their regulatory capital employed grew by about 10% in 2024, which is right in line with their projections.
Right, and they're expecting to keep that 10% growth rate going through 2025.
Exactly. Thanks to ongoing investments in their grid and those massive renewable energy projects they're working on.
Now, for our listeners who might not be familiar with the term regulatory capital employed,
it basically refers to the amount of money a utility has invested in its infrastructure.
Right.
Like the power lines, the power plants, all that stuff.
and this is what they use to determine the rates they can charge customers.
Exactly. So
Right.
it's a really important metric for understanding a utility's financial health and their ability to generate returns for investors.
And that 10% growth rate for FPL suggests that they're striking a good balance between investing in their future and staying profitable.
Absolutely. Now remember, FPL is getting ready to file a new rate case.
Right.
That'll cover 2026 to 2029.
A 4-year period.
And they're projecting that the average residential customer's bill will only increase by about 2.5% per year during that time.
2.5%. That's pretty low considering everything else that's going on.
Especially with inflation being what it is these days.
So if this gets approved, FPL customers will continue to enjoy some of the cheapest electricity in the country.
It's pretty amazing how they managed to do that.
So how do they pull it off? What's their secret?
Well, it boils down to their focus on efficiency and innovation. They're always looking for ways to improve their operations.
To reduce costs
Exactly. They're using technology, streamlining their processes.
and just being really smart about how they spend their money.
Exactly. All right, now let's switch gears and talk about NextEra Energy Resources.
Their renewable energy powerhouse.
They had an incredible year.
They did.
13% year-over-year growth in adjusted earnings for 2024.
Wow.
And a big chunk of that growth, about 48 cents per share, came from new investments in renewables and storage.
That really shows the strength of their development pipeline and the huge demand for clean energy solutions.
Absolutely. They're riding that renewable energy wave.
And they're riding it well, while their gas infrastructure businesses actually saw a slight dip in earnings.
Yeah, that was interesting.
They did manage to stabilize things in recent quarters.
They did.
So what caused that dip in the gas business?
Well, they said it was a combination of things, higher depletion expense.
Okay.
And they also sold off their Texas pipeline portfolio.
Right.
But the important thing is they took steps to fix those issues.
And they got those businesses back on track.
Exactly. So overall, both FPL and NextEra Energy Resources are in a very solid financial position.
Sounds like it. And one thing that really stood out to me was their balance sheet.
Oh, yeah.
It's a rock solid.
It is. It gives them a lot of financial flexibility to keep investing in growth.
And to weather any storms that might come their way.
Exactly. It's like having a financial safety net.
And speaking of safety nets, they also mentioned something about interest rate hedges.
Right. That's important.
Yeah.
NextEra has been very proactive about managing their interest rate risk.
So they're not caught off guard by any sudden changes.
Exactly. They have a whopping $28.5 billion in interest rate hedges in place.
$28.5 billion.
That basically locks in their borrowing costs and protects them from those sudden spikes in interest rates.
Which can be a real problem for companies with big spending plans.
Absolutely. So it's a smart move by NextEra to protect themselves.
It really shows they're thinking ahead and trying to mitigate potential risks.
Absolutely. All right, so we've talked about FPL and NextEra Energy Resources.
And their solid financial positions.
But what about the big picture? What about their long-term outlook?
Right. Did they give us any hints about what they expect in the coming years?
They did, and their projections are pretty optimistic. They reaffirmed their long-term financial expectations. An average annual growth rate in adjusted earnings per share of 6% to 8% through 2026.
6 to 8%. That's impressive.
It is. And they expect to grow their operating cash flow at or above that rate, too.
So what's driving all this projected growth?
Well, it's a combination of things. The continued growth of FPO, the expansion of their renewable energy portfolio.
And of course, their move into the gas-powered generation market.
Exactly. They're hitting on all cylinders.
And for our income investors out there, they're planning to increase their dividend per share by about 10% per year through at least 2026.
10% per year, that's music to an income investor's ear.
Right. So they're not just growing, they're sharing that growth with their shareholders.
Exactly. It's a win-win situation.
So it seems like NextEra Energy is a company that investors can count on for both growth and stability.
I would say so. They have a proven track record. They've met or surpassed their financial targets for 15 years in a row.
15 years. That's unheard of.
Especially in the energy sector, which is known for being pretty volatile.
So they're definitely a company to keep your eye on.
Absolutely. All right, so we've covered NextEra's impressive performance, their shift into gas power generation, and their solid financial outlook.
We've looked at FPL and NextEra Energy Resources and seen how they're leading the way in efficiency, innovation, and customer value.
But we haven't talked about the potential risks and challenges that NextEra might face in the future.
And that's something we need to do.
Yeah, every good investment analysis needs a dose of reality.
Right. We need to understand the good and the bad.
Exactly. So in our next segment, we'll dive into some of the headwinds that could impact NextEra's growth.
And how they're preparing to navigate those challenges.
Stay with us.
Welcome back to Talk Tickers.
It's time to face some hard truths.
Right. We've talked about NextEra Energy's impressive wins.
They're solid financials.
But no investment is without risk.
Exactly. And we need to understand those risks before making any decisions.
So let's get real. What are some of the challenges that NextEra might face in the coming years?
Well, one big one is regulation.
Ah, yes. The energy sector is heavily regulated.
It is. And any changes in those regulations can have a big impact on NextEra's business.
For sure. We've seen a lot of talk about the Inflation Reduction Act and how it might affect renewable energy projects.
Right. The IRA is generally seen as a good thing for clean energy, but there's still a lot of uncertainty about how it's all going to play out.
And what about the new administration's focus on creating jobs here in the U.S.?
Right. They want to bring manufacturing back home.
Exactly. Could that create problems for NextEra's renewable energy projects if they have to source their materials and components domestically?
It's definitely a possibility. It could drive up costs and make things more complicated.
So navigating this regulatory maze is going to be key for NextEra's success.
Absolutely. They need to stay agile, adapt to the changing rules, and work closely with regulators to keep those projects moving forward.
What other challenges do you see on the horizon?
Well, competition is always a factor.
Of course.
And the renewable energy market is getting more crowded all the time.
So NextEra will need to fight to maintain its position as the top dog.
Exactly. They'll have to leverage their size, their expertise, and their relationships to keep winning new projects and keep that pipeline flowing.
Okay, and what about interest rates? We've seen them go up and down lately.
Right. It's definitely something to watch.
Could rising interest rates make it harder for NextEra to finance those big infrastructure projects they have planned?
It's possible higher interest rates mean higher borrowing costs.
Right.
But remember, NextEra has been smart about hedging their interest rate risk.
Right. They have that massive $28.5 billion in interest rate hedges.
Exactly. So they're in a good position to weather any storms that might come their way.
So we've got regulation, competition, and interest rates to keep an eye on.
We do. But don't forget, NextEra has a long history of overcoming challenges. They've got a great management team, a strong financial base, and a clear vision for the future.
So while there are risks to consider, the overall outlook for NextEra Energy is still pretty darn good.
I'd agree. They're well positioned for long-term growth.
Well, that wraps up our deep dive into NextEra Energy's Q4 2024 earnings call.
We covered a lot of ground.
From their stellar performance to their strategic move into gas power generation to the potential risks and challenges they face.
We looked at their strengths, their weaknesses, and their long-term prospects.
Hopefully you learned a thing or two about NextEra Energy and their role in the ever-changing world of energy.
But as always, do your own research.
Talk to your financial advisor.
Make informed decisions.
Right, this is just one piece of the puzzle.
And remember, this is not financial advice.
Now, before we sign off, we always like to end with our "This is not financial advice" segment.
Right, where we throw out a crazy, but maybe plausible trade idea based on what we've learned today.
So what if?
What if NextEra decides to go all in on their gas strategy? And they make a bid to buy a smaller gas utility.
Wow, that would be a big move.
It would. They'd be going from partnering with GE Vernova to actually owning a piece of the gas distribution network.
So they'd have their own pipelines, their own customers.
Exactly. They could leverage that existing infrastructure to grow their gas operations really quickly.
It'd be a bold play.
It would, but it could give them a huge advantage in the energy market.
It would definitely shake things up.
For sure.
Now, of course, this is all just
It's
hypothetical.
certainly not financial advice.
But it's fun to think about the possibilities.
It is, and it shows the kind of strategic thinking that makes NextEra such an exciting company to follow.
Well, that's all the time we have for today.
Thanks for listening.
We'll catch you next time.
With another deep dive into the world of finance.